Executive consultants, you're welcome. In our last video in regards to QuickBooks, we looked at purchasing, we saw how we got a discount, and then we saw how we also make a purchase returns using QuickBooks as an accounting software. So today we are going to do the sales. We are going to see how do we make a sale, how do we make a sales return, and how do we give a discount. So we are going to go to our company that we created, and then we do all that in this video. All right. We looked at these centers already, the customer, the suppliers, and then we had our customers already. So we have our customers. We have Sarah, Kamoga, Jones, and the more like you may have in your business, but because it's a tutorial, then it is just basically it's being used for education purpose. So it all starts from a sales order. So we are going to get a sales order from Sarah, and then we'll say Sarah wants, let's say, iron sheets, and then we'll say she wants about 18 of them. And then Sarah also wants roofing nails. Remember, we bought all these things. So if you have not seen how we bought all these nails, you need to watch the video before this. And as you can see that the moment we do all this, our VAT that we put in the system, the 18%, is already captured. So once that is done, then we'll say save and close because we've received an order from Sarah. So once that is done, then I will have to deliver. So we have to make an invoice to Sarah. So we will select, we'll still come here and then we select. The moment we select Sarah, they are telling us that there is a sales order from her. So click on it and then we'll say create an invoice for the selected items. And I will say, yes, they are. That is if you want to make changes, you can make them. But then we don't want to make changes and we want our invoice to be in place. And there we go with our invoice. And then it is clear that we have put all she wanted to receive. And as you can see, she's already known as an accounts receivable. So you're going to see why she's already recorded as accounts receivable. When I say save and close, and I come to check in our chart of accounts, particularly the one report called the balance sheet, where we find such, we will come and you will see that our accounts receivables are here. We have Kamoga, and then we have Sarah that have not yet paid. Kamoga with 128, and then Sarah 802. So those are our accounts receivables. Now, for as long as we don't make for them, we don't receive money from them, then they are accounts receivables. So we will come and then say we'll receive money from Sarah. So we will come and then say we are receiving money from Sarah. She's supposed to pay 934,000 shillings. So we will come So we have her, she's supposed to pay 934,000. So assuming we want to give her a discount, because we said we want to say how we give a discount. So if we want to give a discount to Sarah, we'll come and say, let us give her a discount of 34,000 so that she only pays 900. And you can see the moment I put in the discount amount, you can see that from 934,000, it is now to 900. And once I do that, then I will be done. So I will come and I put the 900,000 that she's supposed to pay. And I will come and say save and close. Once that is done, I will need to come and deposit the amount. Let me show you something small. When I come to chart of accounts and I come to the reports, I come to profit, to sales rather, you can see that we have our sales already in place. we have the amount that we've received from Sarah, which is 934,000. But if I go to the banks, this amount that we have, let us check with our, let's check with Stanbic. You can see that there is, we have undeposited funds, and then you can't see anywhere else that Sarah has paid money. So even if I come to KCB, we are going to see that there is nowhere where Sarah has paid. So what do we need to do? We need to come and record that deposit of 900. And once I do that, I would say, okay, and then they'll bring, and I will select, let's say, still Stanbic. So I would select Stanbic, and I would say, okay. So once that is done, that means I will have nothing to deposit. And what is now needed, we've seen how to create a sales, from the sales order to putting an invoice, and then to receiving payment. Okay, now, in most cases, we sell items, but then we realize that sometimes these things, especially like the items that we sold to Sarah, the iron sheets and the nails, might be default, might have a technical knockout. And then she says, you know what, Douglas, I'm returning some of the items. So where do you go for you to record the sales returns? So you will come and say refunds. So when you come to refunds, you're going to come and then you select Sarah. And it is very important because, of course, when she returns them, you know the amount, the items that you sold to her. So we sold to her, it was, let's say, iron sheets. She took, I think, 19, but let's say she returns 5 of them. And then about the nails, she returns about maybe 2 kilograms of nails. Probably they are not what she wanted. So once that is done, I'll say save and close. But now this is what I wanted us to look at. When you say save and close, this credit note or refund has a remaining balance, which you may use. What would you like to do with this credit? Do you want to give a refund, or do you want to apply it to an invoice? Now, should the customer return the goods before paying, then you can apply it to the invoice. But because she has paid, we cannot apply it on the invoice. Well, that gives us with 2 alternatives. Retain as unavailable credit. That means if Sarah at one time comes to purchase items, she will have available credit of 215,000. Or she can say, you know what, executive firm, kindly give me my money, I go buy from somewhere. Probably the items she has returned, we don't have them in our stock. So we'll say, let us give a refund. And of course, once that is done, then we'll need to come, and then we are going to say check, and then we'll say let's use this. So let's use Stanbic to pay her. And then once that is done, we can say maybe being for sales returns. And of course, we'll say, okay. So once that is done, that means our sales have automatically reduced. And how do we do that? We need to come to our profit and loss account, and then we need to look out for that in particular. You can clearly see that we made sales, but then later on we had to make a return to Sarah. So there is a credit note that we gave to Sarah, which is here, and then we can clearly see that it was already refunded. So that is how we create a sales, and then a sales discount, and then a refund. But now let us try to see if we can create something very fast here, and then we see how we can apply the refund to someone. Let's say it is Jones, and then Jones wants, let's just pick one item just for the purposes of learning. John wants he wants 5 books. And then, of course, we know the rate. Okay, let's make the rate uniform. And once that is done, we'll save and close, and then we receive payment from, now we've not received payment from him. So let us give a refund to Jones. So we'll come to Jones, and then we will come to the items he bought, and then he took 10, so he has returned maybe 2. So if he has returned 2, we will still come and then say save and close. Now here we are going to say apply to an invoice. So we will say apply to an invoice. And once that is done, then we will say, okay. So that means if you are receiving payment from Jones, it is going to say, let's say Jones, and you can see that he has available credits of 5. So this simply means that we literally had nothing to probably receive from him. Maybe I think I didn't put enough items for him to buy, but that is how we get to make the sales, and then how we also get to make purchases, and then we make discounts on both ends, and then we also see how we make returns and how we receive returns. And the next video, we'll be looking at how we play with the different reports, how we close the financial years, how we do a lot of work under reports. So in the next videos, we'll be looking at the different type of reports under QuickBooks. Executive consultants, let us learn together.